Hey team, this is Ryan, and Friday, if you were in the chat room, I mentioned that I was going to make a video on 3 trades that we should have played that maybe some of you did, but I didn't. And these are the kind of setups that I like, and these just got by me. But I want to make sure that you're looking at some of the setups I'm looking at. So obviously, the more of us that are looking for these setups, the better. We all become better traders, and we find more trades throughout the day. Let's start with a look at ARIA, which finished up 8.8% for the day. These are intraday scalp trades. They may have finished fine for a swing, but I'm focusing mainly on how we could have played them intraday to make some money. So scalps, right? Or day trades. So I've gone over a few times some of my 3-minute chart setups, and I'm gonna just kind of rehash it or go over it again one more time to make sure that you know what some of the key features are that I look for, or what I set into my screens. Number one, pivot points. They're right here across the top. Pivot point, VWAP, EMA 13, EMA 4, and let me add one more EMA. Moving average, price history, edit, simple, move it to exponential, and 20 or 21. Some people do 20, some people do 21. Okay. And that kind of gives you, the 20 gives you kind of a range. You find that a lot of stocks move up. This isn't a great example of it, but a lot of stocks move up intraday, and the shadows on the candles bounce off the 20, and things are really going south if the 13 and the 4 cross below the 20, like you see right here. Okay, you notice right here that the 4 dropped below, but the 13 did not. All right, but let's get to the trade. So those are the main things I'm looking at on an intraday chart for a stock. Now, if we would have picked up ARIA on the scans this morning or Friday morning, either through scans in your trading tools or on Twitter or what have you, if we would have picked that up, we would have seen the morning gap. So the yellow line is Thursday's close, right? The solid yellow line. And you see the time on here. This is the morning open right here. So we had a morning gap to about right here. All right. As a matter of fact, the open was 6:01, and the close was right around 587. So we had a little gap up with some volume. That should have sprung a lot of scans out there. I, for one, am, especially in a down or choppy market, try to avoid trading a lot of stocks at the open. I like to wait for 30 minutes, sometimes up to an hour, and then revisit that stock. Keep it around, keep an eye on it, watch its volume, watch the chatter, that kind of thing. So for me, this move up, it's a bull move. You're above VWAP, you're above everything, right? Initially. But you notice as soon as it got to R2, that VWAP immediately started flattening out, right here. It's moving up, which is good, which is fine, but the price is moving up quite a bit relative to the VWAP. In other words, you're having quite a bit of separation here, all right? And you're seeing some extended shadows on these candles, which means it may be getting, this move may be getting a little top heavy. But let's look at more specifically what I'm looking for, which is, you've got to move. I'm looking for a pop. This is for the morning. A pop, a drop, and a pop. Pop, drop, pop. You've probably heard me say it now a couple times. And this is a particular setup. There's other setups to look up, but this is specific to gap ups with strong moves, okay? Or just strong moves up, let's say. Now, it pushed up quickly. By 10 a.m., we're over R3. We're over resistance 3. Finally got a reversal shadow after VWAP is basically starting to take out EMA 4 and 13, right? You see that right here. That's okay. That's not really what I'm looking for, but it's just something you're watching as it goes along. That's the pop. Now there's the drop. Okay, the beauty of this drop is it loosely held R3, which is fine. You know, if you try to make it exact, you'll never get in a trade, or it's very difficult. But it loosely held R3, which is fine. But notice how strong it held EMA 13, okay, which is the purple line. EMA 13, and it's holding EMA 13, which means it's in a bullish trend up, period. End of story, intraday. Now, the second piece of that is EMA 4 is coming on down, but never breaks below. All right, so this move back up, where price gets back up comfortably above R3 and EMA 4 comfortably above EMA 13. You notice how nicely these three EMAs are running next to each other, all above VWAP. Everything about this is bullish, okay? Now, my entry on the pop, drop, pop, you could take this pop right here if you want to off support. You know, it came off of EMA 13, it's through R3, everything looks great. But my entry is to get through the morning high, which is right here, and that high is 625. The high here is 625. So in other words, this move, this big candle here, actually failed to get through the morning high. It got exactly to it. Pulled back a little bit, starts dancing on EMA 4. Again, we're still in a very strong uptrend, but it's a matter of finding an entrance and finding an exit if you're playing a scalp intraday, right? You know, you're like, well, it's already up 5%. When do I get in? That kind of thing, right? It's totally about these kind of indicators. So the safest trade is to get in when it moves above. So that would be on this candle right here. All right? It gets above, and as long as I'm above VWAP, as long as I'm above an R zone, so now R3 is support way down low, right? What I'm now focusing it on, what I'm keying on, is EMA 13 420 relationship. Okay, so I'm in right here. Let's say I'm in right here, about 626 range. Okay, we go chop 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 chop. It's moving sideways. This may have shaken me out, may have, may not. It's hard to say. You know, looking back on it, it's hard to say. Because EMA 4 did drop below 13 and 20. Most likely it wouldn't have shaken me out because 13 stayed above 20. As you notice right here, it formed a nice little, almost like a bottom of a bowl right there. It's very nice, just like EMA 5 did here, or EMA 4 did here. So it probably wouldn't have shaken me out, but I can't guarantee that. But what you notice though is 13 is staying above 20, VWAP is above, EMA 4 dips, becomes right back. Even if you would have sold here, you would have basically gotten out as a break even, no harm done, right? You would have not have lost money, and that's what I get emails about every single day, which is I chased and I lost money. Well, if you got out here because you were nervous about EMA 4 getting below EMA 20, you would have broken even. All right? But if you were not, if you like the EMA 13 above EMA 20, which I do, that's still bullish, above VWAP, everything's still fine, you would have held on. You would have held on, you've held on. Look at all this strength. You have train tracks, these EMAs running next to each other, and then wham, you have an EMA 4 slamming fast through EMA 13 and 20. So that's the speed of this fall with these two big red candles may have shaken me out. It's similar to here, right? Very similar. You drop below both EMA 13 and 20. See the same action here. So that may have shaken me out, but I probably would have got it shaken out here when 13 crossed 20. So somewhere in this candle. So, you know, you're thinking, well, that's not a lot. You know, you didn't make much money. It's a scalp. That's what you have to remember, folks, right? And you see this support level here, this trend, these wicks that come up. Definitely would have wanted to exit on this pullback at that point, which would have been right about here. But I'm sorry, here, excuse me, which is about right. That's when EMA 13 crossed below EMA 20. Okay, so that's 633 on a 626 entrance. You know, that's only 7 cents. That's not a lot of money. And if you weren't in very heavy, you know, you didn't make a lot of money there, but you made money, unless you're only in a couple $100 and then you just covered commissions, right? But you made money. And the whole idea is to move in and out of these trades just like that. Even if you made 20 bucks, it's a lot better than holding on to it down here. It did have a nice R3 bounce, which is a whole nother play, right? But the idea is, I find that, and I've done it a million times myself, and I still do it. We hold on to a stock, even if we've only made 20 or 50 bucks or 100 bucks or whatever it is, thinking, oh, it's going to go a little more. Oh, we're going to get a little more out of it. We're going to get a little more out of it. You need to ignore the price move other than your price stop. You know, if you say, my maximum stop is I'm willing to lose 200 bucks on this trade. You know, you buy it wherever it is you buy it. You find that stop, you know, and you refuse to go lower than that. But I like to stay on top of the trade intraday and say, as soon as it breaks a pattern that got me into the trade, then I'm out. And then I go, oh, okay, that was for 20 bucks. Oh, that was 100 bucks. I don't try to figure out, oh, if I sell now, how much am I going to make? Right? Because then you're like, oh, I can make a little more. I can squeeze a little more out of it. Because it never did get back up to this level. Even with this move here, it never got back. So I may, if I would have traded it, I might have made 7 cents. But I might have gone in heavy and made, you know, a couple $100 bucks. You do this 3 or 4 times a day and you're a monster trader, right? Okay, let's go to the next one. CIGX. Same story. Here's the morning. Here's the gap up. Tweezers. We've talked about tweezers, right? 2 big, long, extended shadows on candles next to each other. 3 minutes or 5 minutes, doesn't matter. So that's a pretty darn good sign this is going to reverse. Now, it reversed. So I try to avoid buying morning moves, especially in a choppy market or a bearish market. Right now, I would say we're leaning bearish. If anything, we got to hold support in a lot of areas, in a lot of sectors, and a lot of indicators this week in order for us to regain the bullish momentum. So anyway, back to, sorry, I got a little distracted. So here we are. We got the pop, we got the drop. It's below VWAP. You see how it keeps testing VWAP through here? And you notice I was talking earlier about EMA 20 has a tendency to measure out the bottoms a lot of times on an intraday moves, and it kind of, it's probably more like EMA 30 right through here. But what we really care about is it popped and it dropped and you're below VWAP. Okay, now we're above VWAP in this area. Okay, so we're highlighting this world. Notice some volume coming in. This is a good sign, right? Some things are looking better for us. We've been patient on the trade. We didn't buy this pop. You know, we're not hoping this whole time that it comes back. Oh, what am I going to do? And then you sell, and you get hurt, right? Waiting for it. You've got the EMAs running next to each other very nicely, very clean. You're above VWAP. Now, from the last chart, remember what I said. The safest trade, nothing's 100%, but the safest trade is to wait for the break above the morning high, which was 353. You have to get over here to this candle to get to 353, right? Okay? Because if you're basing it just on the R's, you're noticing that it's like, oh, I'm through, I'm failing the R, I'm chopping at the R, I don't know what to do. You know, there's no conviction here. All right? But we finally got the strong bounce. Notice the volume. See the volume down here? This volume corresponds with the candle that breaks the morning high on beautiful EMAs running next to each other on an upward trending VWAP. So you enter here. You know, if you're right on target, 353 is the morning high, right? If you're really perfect, you're in at 354, right? I mean, that's a tough trade, but you know, let's say 354. You're riding it, you're riding it, you're riding it. No reason to sell, right? You're riding all three of these up. You're even on top of EMA 4. I mean, you've got a bull massive run going here. You're riding, you're like, uh-oh, I'm at R2. We got to watch it. Let's see if it gets through R2. If it doesn't get through R2, I'm selling. I'm out. I'm done. Why not? It's a resistance zone. That's what RC stands for. Resistance 2, level 2. And you notice if you look the rest of the day, there's a lot of chop around R2. But it kept going through. So we're like, okay, I'm calm. I'm staying with it. I'm staying with it. This pullback, you may not have sold up here, right? Because you wouldn't have known this big red candle was coming right behind it, especially with this volume. But be careful on a big volume move through any level of resistance, because sometimes that's a blowout volume. That just says everybody's getting out of the trade. All the scalpers, all the morning traders are like, okay, got through R2, I'm done. I got my money. So you just have to watch it. Sometimes it'll add more volume and the Momo keeps going, but you got to watch it. So now you're in this candle. You're still okay, right? You're above everything. You're above R2. But now you're testing R2 again. You're like, maybe R2 isn't going to hold anymore. But let's see if R2 now it creates support. Now we're in this candle. Volume on these red candles that are relatively strong, right? If you look at the rest of the morning. Not as high as these buys, but relatively strong. So there's a little heaviness. The sell is this candle. 2 reasons. No matter when you sold it, at the bottom or at the top, it doesn't matter. This is my trade. This is how I view this trade. I'm selling in this candle because, number 1, failed R2. So you know I'm selling somewhere down here, right? Failed R2. Number 2, long shadow. It's printing out a long shadow because that means it started this 3 minute started right here at the top of this body, right? And then it tried to go up and get through R2, and then it failed. It went all the way down here, and it closed that candle right here. So it opened on this candle below R2, so I'm out. I'm done. So what does that mean? What's my trade? 354 to, let's say 364, just for math, right? 10 cents. So what, right? You only made 10 cents. You're so busy looking at 10 cents only made me 50 bucks that you're not thinking about the fact that you just booked profits and you're moving on, right? And you're reducing stress. You're not concerned. What was that? 365 minus 355. I think I said 354, but whatever. 365 minus 355 divided by 355. Good, nice little turn, right? Okay, so that's my sell. Now, if you're willing to give it a little more range, which is fine because you're above VWAP, you're above EMA 4 is above 13 and 20, that's fine. Maybe you want to let it ride a little bit. You keep letting it ride, keep letting it ride. So it's all back to that testing the highs again, just like we did this earlier, right? So we care about this level now. What does it do at this level? Well, it printed a big old shadow with a following big long shadow on a red candle. If you're not selling here, then you're not reading this chart right. Basically, this is saying we want to break through previous highs, but we just can't. We keep extending, and we can't, and we're failing. That would have been a monster trade, right? From a just what can I get out of this trade standpoint, that would have been a beautiful trade. And that's the way I go. You know, and I'm going to just forget all this garbage the rest of the day. Now, some people say, well, we missed all this. We did. You're right. We absolutely did. And sometimes, let's take this back a little bit. There's a second trade here, right? There's the pop, drop, held yesterday's high. Sorry about, I don't know how to get that window. But you see the tops of these candles? That's creating like a high resistance. Well, it created support on these candles. You see that? So, you know, that's an opportunity to take an entry, take a buy. And there's nothing wrong with that. Except you have to remember or keep in mind your risk. You have to think, we're in a downtrend right here. And it held for 2 candles, but that doesn't mean it's not going to engulf and keep falling down. Maybe I'm willing to take that risk, maybe I'm not. I'm talking about risk reduction, not about the maximum possible trade. You've got a second trade here in the morning. On this triangle, right here, it's an ascending triangle, a 3-minute chart, banging against VWAP. So a second possible trade was this candle on the break through the ascending triangle and through VWAP. There's nothing wrong with that trade either. Again, it's got a little volume support, so that helps, right? Nothing wrong with that trade. But you have to think about, okay, if I'm in on that trade there, what's my stop? What kind of give do I have? What kind of range can I live with? Am I willing to take it all the way back to this support line? That's a pretty heavy drop for a stop, right? But it's not a bad trade. It's not a horrible trade. Or you can say, as soon as it gets below VWAP, I'm selling, because you're so tight right there, right? Now, let's go back to my original trade. You get above. You say, okay, let's say I did do what Ryan was talking about. I bought in on this high, or break of the morning high. What's my stop? Very good question. What is your stop? There's a long ways down to VWAP. And, you know, 355 to 344 can be painful. So you look at it when you get in, you say, if I'm getting in right here, where are levels of support? There's one here at these 2 candles basically, this attempted move, this failed breakout. Do the math real quick on your calculator or whatever and say, okay, that's a 1% loss, whatever it is, I don't know. I'm willing to take that. That is now my stop. Okay? This is the initial buy stop. This is when you buy it and say, if this move immediately turns, where am I getting out? It's easy to play it as it goes along during the day, right? Because you can say, okay, we're moving up. If it pulls back to here, I'll take it. Because it's safe. You've made a profit at this point. Who cares, right? You're making profits. It's more about, okay, I can be more strategic. But on the initial buy, you have to say firmly, what is my stop? Am I willing to go back to this support? Or am I willing to go back to EMA 13? Or am I waiting for, or really the best stops are this or R2. I'm sorry, R1. Okay. Below that, then you're having to wait on VWAP and other things like that. So I hope that helps. One more. Let's do one more. What do we do? Okay, GERN. GERN. This last candle at the end of the day makes it a little messy. I apologize. Okay, so here's Thursday's close, the solid yellow line. Here's the morning gap up, right? So it closed at ballpark 474. It opened at 480. So it had a gap up, and then you notice there's your pop, and it popped all the way through R3, shook everybody out in the exact same candle. So you're really mad at yourself if you bought at the open on this, right? You're like, oh, just immediately went down. All right, so pop, drop, horizontal consolidation between R1 and R2. But there's no reason to buy. You're below VWAP, and even at this point, you've got EMA 4 below the other EMAs. I mean, there's nothing bullish about that. All you're doing is holding ground. Now, it gets different in this area. Again, back to the last chart, you can play the VWAP trade, which is as soon as it crosses above VWAP. It's not a bad trade here. There's volume down here. It's not bad because not only does it break through VWAP, it breaks through R2. All right. Again, my safest trade is always to go above the morning pop, but this is not a bad trade. You can take that trade and say my stop is VWAP. Okay? And you're like, good trade, good trade. Tall shadow, maybe I'm exiting. You know, that's not a bad trade. So let's say that's one trade you could have made here. All right? The second trade is You're saying to yourself, I'm waiting for the break of this. All right. This is tricky because look what happened. That means you bought it here, which is fine because your next candle, you're still going up. You still have volume. Everything's fine. But bright and early in this trade, you have a long shadow. So you're already maybe a little concerned. You may not have sold, but you may be a little concerned. EMA 5 is rolling over on this consolidation, okay? Now, you can say to yourself, well, I'm going to hold this because I'm still positive because I bought here. Let's draw that line. Let's make life a little easier for everybody, shall we? Oops. What happened? Okay, so you bought basically here. All right. Now, this is a heavy fall, is it not? We have an EMA jumping through 13, EMA 4 jumping through 13 and 20 very quickly. And it immediately gets to your entry. You could say to yourself, done. I didn't make any money, I'm out. I'm done. Which is fine, because you broke even. Your trade is over. Or you could have said, you know what, I'm going to hold on to it until it gets to VWAP. Okay, so you sold here, which means you lost 1 cent. 483 to 484 or 485, maybe 2 cents. In other words, you paid for commissions and a little bit more. No big deal. Because you're still in the game, you're sitting at home and thinking to yourself, oh, I lost 20 bucks here. I lost 20 bucks here. Oh, but I made 300 bucks over here, right? It's okay to lose a trade as long as you're making more on the winning trades versus the losing trades. What you don't want to do is buy the break of this high and hold it and just say, well, you know, I don't know, maybe it'll come back. Luckily it did, but you don't know that it was going to. All right? So let's say you sold right here. But GRN is still in the game. It's up for the day. You're at, you know, above R3. And I'm not sure these R's are right now that I think about it. But anyway, it's probably set for tomorrow, now that I think about it. But what you can always do is say, we're focusing on this morning high. Look, it made it through the morning high again here, right? And EMA 3 crossed above 14 and 20. So you're back to good again. This is a good land. So let's say you took the trade because you're above the morning high, and you could have ridden it all the way up until EMA 4 drops below 13. Or you could have gotten out on this engulfing big old red candle, right? Or if for some reason you held EMA and just kept on holding it, you'll see that EMA 13 drops below EMA 20 right here, which is a definite exit. So you would have been out here, and you would have made 5, 6 cents, whatever. So my point is this, you know. Don't worry about, oh, that's only 4 cents, or that's only 5 cents, or I'll hold it because I want to make more money. You have to play defense when you play stocks, which is I don't want to lose money. And every time you get above one of these indicators, you get above VWAP, or EMA 4 gets above 13, or EMA 413 get above 20. Every time you do that, every time those steps happen, or you get above the morning high, in these examples, you're increasing your odds of a positive return, right? So you're increasing your odds, even if it's 50 bucks or 20 bucks. You're increasing your odds. If you're chasing a stock, let's look at Apple. You know, I don't know what happened there. I bought it, I chased it, right? I mean, it's a chase stock. You had a gap down, and then a gap, and then the opposite of what we've been trading earlier, which is pop, drop, pop. This is a drop, pop, drop kind of, right? So drop first. There's your big extended shadow. So it's the time for the longs to come back in and play a trade. But it never got back to yesterday's or Thursday's lows, which is these here, and it just sold off on a declining VWAP. Do you see any reason along here to buy it long? I did, but I shouldn't have, right? I was playing the 100 SMA because I'm buying April calls. It's not a scalp, so it's a different trade, right? But intraday and risk trade, if you're thinking, yeah, I want to play options too, but I don't want to take losses. I don't want to sit on losses for 4 days in hopes to get gains on the 5th or 10th day on an option call. There was no trade. There wasn't a trade here. Excuse me. Wow. I didn't even notice that. Sorry. It gapped up, right? So there's your pop, and then the drop. You want a better reason not to buy the pop, then there it is. This is a great example. It popped up huge, created tweezers, which is, if you bought it, means sell it, in my opinion. That's what I would do. I see 2 tweezers on a pop, I sell it. And even on its way down, it's creating large shadows on the upside, which means it's just going to keep on going down. It's just saying, I hate life. And then by the time it gets EMA 4, gets under 13 and 20, and everybody gets underneath everybody, right? It goes the opposite of what you're looking for from a bull standpoint. Like, this is a short. This is a clear short trade because it's the opposite of what you're looking for in the bull trade. There is no reason to buy all day long. Like, there's not a time other than maybe like right here. I guess EMA 4 and 13 get above EMA 20, but you know, the whole rule about testing previous highs, well, there was a previous high back here that this area never got close to. So why would you buy it long? All right, so those are the charts I wanted to go over that I mentioned I would on Friday. The intraday trade, CIGX, GERN, ARIA. I hope that helps. I hope that helps you manage risk. It's very painful to wish and hope that a stock comes back after you've gotten into the trade. So, you know, lose 20 bucks so that you can focus on winning 200 on another trade, right? All right, hope it helps. Send me an email if you have any questions. Ryan at Bulls on Wall Street. And good luck this week.